Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. Let's take another look here at Bitcoin, see what's going on. 88,800 price has bounced off this local support about 87.8, roughly a 0.786 fib level. But more importantly, that is kind of just like that bottom range of that point of control. So now that that liquidation has been swept, we may see a swift recovery there up to the local resistance here. Keep in mind at 89,700, that's the next resistance range for us. But between now and then, honestly, anything could happen. This is looking like we're trying to break bearish here on the hourly, but we want to double check a few other key factors, kind of see where that's at here. Okay, so let's take a quick look at the backend data first and kind of go from there. And if you are new to the channel, maybe you've been watching for a while, thanks again for always being an awesome part of my life and just hitting that like button and or commenting below if you get a chance. So let's take a look here. We are looking at the liquidation levels here for the wrong chart. Let's pull up Bitcoin and kind of see what it's looking like. If I'm not mistaken, that low 88K range had some chunk of liquidity, and once that got swept, we're probably going to see a little bit of a bounce here, and that's pretty much what we're seeing right now. This is the last 12 hours on the left hand side, so it's kind of like a zoom into the local range. We can see here roughly about 87.5, 87.6 is that lowest point to sweep a majority of the local liquidation. Okay, so a lot of that has been taken care of. It doesn't mean the price is going to shoot straight up, but it does imply that we're probably going to go range bound and down, or potentially break this this lower high pattern that we're seeing right now. Okay, so generally speaking, this is neither good nor bad. It's just kind of there. We're also going to see a more long start to accumulate here soon. But for right now, that is just kind of neutral. When we look at the delta, I'm happy to see this finally. It took forever. We're now down in the $8 to $10 billion range. This is good. This is healthy. We want to see this. This actually gives us more potential for the price action to continue higher, based on the simple fact that that delta is decreasing and not just super out of control. All right. Again, I still think 8 to 10 billion is too high. That's still too many longs in the market, and I do feel like we're going to start to see maybe a continuation a little bit lower here, but the simple way to understand that is that that's positive. We have people still feeling like longs are more viable than taking a short, and I kind of side with that, but I also don't too, and I'll explain what I mean by that here shortly. Now, when we take a look here, we got our area of interest here, our open interest is 89,700. So this goes way back here to when we were retesting that as a high, broke through it, and we still see the largest amount of accumulation at that level. So that basically tells us that some folks, majority of folks, are probably underwater right now in the 88 to 89K range. So it's neither good nor bad. It just implies that a lot of people bought the top at 90,000 and probably are still holding. And unfortunately, they're in a bad or not ideal situation here. So let's take a quick look here at the front end, kind of see what's going on now that we understand a little bit more about where we're at on the back end there. Because again, everything's going to be mostly bullish on the daily time frame, folks. So when we look at the daily time frame, we got to take this with a grain of salt. It doesn't mean the price is just going to go straight up because of this, but we are still honoring our ascending trend. Keep in mind this ascending trend here is based on a 4-hour time frame. We'll look at that here in a minute, but the overall sentiment is still bullish, still looking good. We're tapering off a little bit here. We can see we're getting closer to 70, but still really overextended. And that just basically implies that the price is still more likely to go up in the overall sense, but also it can absolutely still come way down and still be bullish, which is kind of a weird thought. But either way, being over the 20-day SMA back there at about 75K, we're still in decent shape. But just know, as volume starts to dissipate, we could very well see the price action start to pull back. So daily time frame is bullish, but I don't really trust that, because honestly, the price moves so fast that the daily time frame is almost irrelevant at this point. What is relevant, I think, is a 4-hour time frame. When we take a look at this here, a moment ago when I was creating a signal here for our community, basically a short position, we can see we were under the 20-day SMA. Now at this point, kind of sort of trying to break above. So I would say today, if we were to close below the 20-day SMA, that could be that little shift in momentum that we're looking for. And I do think there's a distinct probability that we're going to continue to break down here. Again, just based on the overall sense here, I feel like that a lot of late longs are trapped at the 90 to 92K range, and the market makers know that. While we are testing our point of control, basically our support at about 88K is a rough estimate. We test that again another couple times, we could see the price break, and honestly, it's going to be a pretty big free fall if that were to happen. So I'm not trying to get you in the mindset of being bearish, but I'm trying to let you know here, though, that the 4-hour time frame, we're starting to see that shift in momentum. This is the first time we've been below the 20-day SMA on the the 4-hour time frame, which is pretty huge. We are also back, again, under 70 on the RSI. We've been here for a little while, but the truth is we're kind of back in this normalized zone, right? So the price action is pulling back. We can see MACD trying to converge and or diverge rather. The same thing with the MACD, it is diverging, kind of letting us know we've got some momentum on the downside. It doesn't take a rocket scientist to know that we're establishing lower highs and lower lows. That's generally a bearish sign. When we take a look at the hourly, this is really what kind of sells it for me. Again, if I were to try to think about the price going down versus up, if we take a look at the Ichimoku cloud, recognize while we're inside the cloud, we have a tremendous amount of momentum where the conversion line is below the baseline. Okay, we're establishing lower highs and lower lows. We also have the lagging span free and clear of the price action. That's like 6 out of 7 confirming factors in the hourly, letting us know the shift of momentum has started. So while we are in this point of control, this area, I feel like we're going to probably we're still more likely to see further downside. And if we do take a look again at this liquidation delta, while it's tapering off, I still think that's still too high. And with the point of control, more importantly, open interest, it is a form of control if you think about that. We can see this here right at about 90K is that approximate with where everyone is in a long. So could have some really bad some really bad days here coming up here. So I'm just kind of throwing it out there. Of course, it's not a guarantee. We are still quote unquote respecting the ascending trend, but honestly, if you look at the 4-hour time frame here and you look at the SMAs, we're basically testing that level, that range. And if we were to continue to go sideways and just say, just go sideways for today, for example, there's a stronger likelihood the price goes down. Okay. Again, the more you range, the more likely you are to continue in that same direction. The truth is, until we can establish higher highs and higher lows, we're not in a position to take along with confidence. Even though this is an area that I really wanted to take along with yesterday, it seemed very appealing. But of course, why wouldn't it seem appealing when you're at 93,000 and you want to be able to buy the dip on the ascending trend? While the ascending trend is still kind of sort of holding, it's right there on the edge of potential disaster. So it really depends on how you want to trade, honestly. What kind of risk tolerance do you have? Where are you at in the overall sense? Again, I think that we got to be careful just taking longs at this point. We're no longer in this trend, this point where Bitcoin's just firing on all cylinders. It's slowing down. It's starting the realism of the situation is happening. Granted, there could be a very large amount of volume flowing into Bitcoin to cause that to happen. But as you can see, pretty significant outflows here. Money flow index is starting to taper off. There's a lot of reasons why the price action should pull back. Again, I don't think it's going to be a monumental pullback. I think initially 86,400, the 86.4 level, that's basically the local low. That would make the most sense for the price action to pull back to that level, and then we see what happens next. We lose that level, 84 to 83K could be a possibility there. It could be an option for us. So just throwing it out there. Anyways, that's kind of where we're at. I'd love to hear your thoughts. Feel free to let me know. Comment below, of course. Do not forget to hit the like button. And obviously join us over here with Bitunix to Awesome Exchange. I got some really awesome rewards here, about 60K prize pool. So check that out in your own time. I do appreciate you again once more. I will post our playout chart on our Twitter, Telegram, and Discord as per usual. We'll see you next one. Hope you have a great rest of your day. Thanks again.